So I reached back out to my title company gal, her name was Peggy, and asked her if she had any ideas for us. And she actually told me that there was a couple note buyers in town that I could call. I had no idea what a note buyer was or what they did, but she gave me a couple numbers, and I reached out to them. And it turned out that they were a tremendous help. And because I had reached out to two of them, I got to shop the deal. But basically how it worked was if we structured, if we listed that place for sale and structured the owner finance deal a certain way that would optimize our chances with this note buyer, they could then turn around and buy the note, the owner finance note, for cash. They would just cash us out. However, they discount it. So just for instance, let's say it was $100,000 and we structured a deal where somebody was going to pay us $100,000 owner finance. The note buyer would come in and maybe give us $85,000 in cash to walk away, and then they would spend the time over the years to collect the payments. That's how they, make their money. So we found the one that offered the best cash out and listed the trailer for sale, and found somebody that we could structure the deal that would optimize our cash out, which was 10% down, 7% interest over, I think it was like 15 years, because with the mobile home, they didn't want a 30-year. But anyway, so we sold it to these people. We got our $7,000, and then we went to the title company and closed on the wraparound second, and structured it exactly how the note buyer told us to do it. And then what they call simultaneous close, which means just one closing right after another, with the note buyer to purchase that note from us. And I think we ended up with like $55,000 cash, something like that. With the $7,000 that the buyers had given us. I don't remember the exact numbers now, but it was more than enough to then go and buy a home for our family. And we ended up finding a really good deal on a house. I think it was like $145,000. It was 3-bedroom, 2 huge baths. And it was and it had a 2-car unfinished garage on over an acre of land. It had a little shed that had been turned into almost like a little she shed. And it had a garden out back. It was a nice property in a nice neighborhood. And we were able to get into that with a first-time home buyer, 3.5% down. And took, the rest of the funds that we had to buy, furniture and stuff, but then started updating the house. And it was in really good quality. Even the older stuff in there was of good quality. Solid 6-panel doors, sunken living room, so there were some really cool features in there. We just went in and did fresh paint, fresh flooring. I think we did new countertops because they were like a pink or a blue or something. But we didn't have to do a lot. And then we ended up finishing up the garage and doing some yard work to it. But we lived there for about 3 years as we were updating it. And I loved that place. I didn't want to move, but my then husband found a 3,500 square foot house on 3 acres in a subdivision across the highway from us, and, desperately wanted to get into it. So we went ahead and sold our place, and bought this 3,500 square foot home on 3 acres that was in pretty rough shape as far as it needed cleaning and updating, but the bones were good. And it was an estate sale. The kids lived out of state, the parents had passed, and the kids wanted to sell so that they could divvy up the money and move on. So we ended up getting a really good deal on that house. I think it was $135,000, and we had them throw in the lot next door that they were also selling. So yeah, we got a really good deal. That one took us about a month just to get it to where we could move in and live in it. But we structured the sale of our other place to where there was no, it was an easy transition. But we continued working on that place and updating it. It had a lot of 70s, so it was like orange countertops and green appliances and old dark trim and doors. So, we went in and we switched some things out and freshened it up, and we actually ended up staying in that house for the remainder of our marriage while our kids were growing up. We absolutely loved it. The driveway was huge, but it was pitted gravel. We ended up paving that, adding a big fence out in the backyard. Just did a lot. The downstairs of it was unfinished when we bought it, and we ended up finishing that up and had like a little mother-in-law suite down there. Had a big, huge garage, but it was like a single car that went back 3 car lengths. So we couldn't really do a lot with that, but we got it looking beautiful, and that was our family home. Then at some point we started kind of looking into real estate investing. We were like, wait a minute, we're already kind of doing it. What would it take for us to get into it as a business? So, we started looking into that, and at that point we had depleted a lot of our funds just by fixing this house up. So we're like, okay, now we need money to get into a place. And with it being an investment, it was going to be 20% down, and then we were going to need money for the rehab costs. So what we ended up doing is refinancing our home that we had put all this money into, and took a cash out refinance and took that money, and we were able to buy our first actual investment home. And, fixed it up and sold it. And then we took that cash and moved it into the next one. And we just kept going like this for many years. In the process of all that, at one point in time, I got curious about the mortgage loan originating and ended up getting into that and then opening my own company. So we had these 2 companies going simultaneously, and we did really well for many years. And then the housing market crashed, and we had to kind of pivot and move, and, life kind of took us in different directions. And I've missed it ever since. So, but I guess the point I'm trying to make here, and the moral of this story, let me get my notes out here because I lose my train of thought, is just that, if you want something bad enough, go get it. You can find a way to get it. You might have to be patient. You might not be able to do it overnight. You might have to work your way up to it. But if you want it that bad, you will find a way to do it. We did this before any investor loans, other than the conventional 20% down, were even, thought of, even invented yet. So there's a lot of different creative ways of coming up with the resources and the money. Don't ever be afraid to ask questions. Call professionals in your area and ask them, hey, I'm thinking about doing this. Do you have any advice? Do you have any suggestions? Do you know about anything that other people have used? They love, at least in my experience, they love to share their knowledge. And if they don't, hang up and call somebody else.